Hey everyone, it's Rob Folia Properties at Keller Williams Realty, and I'm coming to you today to help answer the question: Are interest rates strangling the real estate market? Meaning, are interest rates, the rise in rates that we've seen over the last 12 months, are they slowing down the market so much that it's causing problems for homeowners and home buyers out there? Let's jump right in. Let's look at some stats and see exactly what's happening in our local real estate market here in Middle Tennessee, and we can at least start to see, hey, is that legit what's happening? First, let's look at interest rates. So this is the stat that I've looked at on these lives many times over the years. But this is straight from the Freddie Mac website, where it shows the trend line for the 30-year fixed rate average in the U.S. And I've always found that this might trend like a week or two behind legit stats. So, like when I talk with one of my trusted lenders and they tell me something that, sometimes this number is a little dated, which makes sense because it's an average based on a previous 7 days. So, like as I'm recording this video on July 19th, it's looking at the average from the 13th, which was actually the average for the 7th through the 13th, if that makes sense. So anyway, though, rates you can see have ticked up. I mean, they're, according to this stat, they're close to 7%. I know my trusted lenders are telling me it's really in the low to mid sevens right now, which is really the highest we've seen in a long time. Maybe not on here because you can see here it peaked twice last year at a little above 7.08. The reality is, though, I mean, it's commonplace to see a rate in the lower to lower mid sevens, which impacts affordability. I posed that question there at the beginning of basically what are interest rates doing to homeowners, home buyers, home sellers? Well, the reality is higher rates impact somebody's payment. And let's just dive in and before we even look at market stats, let's just look at a mortgage calculator here, and you can see exactly what I'm talking about. And I'm just gonna plug in a few numbers just so you can get an idea of what we're looking at. I'm just gonna plug in say a $600,000 home. We're gonna say somebody's putting 20% down, just so we can get rid of PMI. We're just gonna keep everything the same at a 3% rate, which we would have seen a few years ago. Say 18, 24 months ago, a 3% rate was kind of the norm, and it would have been a $2,300 a month payment. Well, a 7% rate, all of a sudden we're at almost a $3,500 a month payment. That payment's gone up by more than 50%. I'm trying to do the quick mental math. I mean, a 1,200, we'll say a 50% increase, but it's a little bit more than 50% with this rate increase. Now, you might be thinking to yourself, well, Rob, what's the difference? I mean, this time last year, it was in the mid fives, let's just say. Well, I mean, that impacts affordability. A 1.5% rate difference impacts things pretty substantially. So again, we were just at what, 3,500. A 5.5% rate, not changing everything, is 3,000. So it impacts things again pretty substantially for a home buyer. It goes, you can see. I mean, it's a $500 a month difference. For some people, that's their car note. For some people, that's paying out student loans or taking care of medical debt or getting rid of credit cards. Or there's so many things that impacts a household budget that, man, these rates, that's crippling almost for some people. And so, long story short, before we look at the market stats, if you're buying a home right now, please pay attention to what this number is going to be, the one that's highlighted here. What's your payment going to be? Ask your lender. Ask them to break it down and walk through it with you. Um, Hopefully you're getting pre-approved and you're talking with your lenders ahead of time. If you are, as long as you are, that rate might change. Like right now, say they're 7%. If say you find your home in 60 days, this could be 7.5, could be 6.5. You're not locked into a 7% rate until you're locked in. And if it's 7.5, man, that payment just went up about $150. And so point being, talk with your lender and ask them to not only break that payment down, but help ask them to explain to you how interest rate fluctuations will impact your payment because it's pretty substantial. It's just good to know about. The reality is, I wouldn't spend a lot of time shopping different lenders. Go with the lender that you trust, that you resonate well with, because most lenders are going to have very similar rates within a quarter of a point. And yes, we just saw a 0.5% impacts affordability. A quarter is going to impact affordability too. However, the reality is most lenders are very similar in terms of the numbers, and the difference is going to be service and who you resonate well with. But let's keep moving. So again, these higher rates, man, they're ticking up. They're ticking up substantially. You would think that because rates are going up, that buyer demand would go down, right? Well, let's take a look. So we've looked at this stat before, and this right here is months of supply. This is the closest basically economic real estate economic factor statistic that we can see of to measure how much demand is in the market. There's we can look at right here. Let's just look at homes for sale. So homes for sale. This tells us how many homes are in our entire MLS. And in fact, let's just look at one county because our MLS is pretty spread out. In fact, they started adding other states for some reason. Don't get me started on that. Davidson County, Tennessee, 3,500 homes for sale at the end of June. That tells us supply, but we don't know how many home buyers are out there. Are there 3,500? Are there 35,000? Are there 350? So meaning, are there 10 homes for every buyer, or are there 10 buyers for every home? There's no way to actually know that because there's no database out there for registered home buyers. It's just not how it works. So we look at months of supply to then see, well, what's the market doing? How level is it? Because months of supply just tells us if nothing else were to hit the market, how long would it take these homes to sell? 3.7 months for June of 23 here for Davidson County. 3.7 months is a solid seller's market. Less than 6 months, and here I'm just going to go back to the max. Less than 6 months is considered a seller's market. More than six, a buyer's market. And then the further you stray from 6 months is how strong of a market it is. And so you can see that historically, this number, at least for the last decade or so, we've been in the seller's market, and historically, it kind of runs at a bell curve. Even here in 2015, when this was a very strong sellers market, almost 2015 to 16 to 17, it was almost an extreme sellers market. You could see bottoming out here toward the end of the year, beginning of the year, peaking, 2.9 months peaking, wow, but then dropping back down. Well, here, we're still in a strong sellers market. 3.1 months, in December, 3.3 in January, 3.4, 3.5, 3.7, 3.6, 3.7. It's still very much trending this way. And as long as we don't see this number skyrocket, which right now is just kind of flat. The last 3 months, 3.7, 3.6, 3.7. And again, it always tends to increase beginning of the year. So I'm not concerned about seeing an increase from March to April because that's just normal. As long as we see this flat or drop, it's just going to continue to be a seller's market. If we see this rise, it might transform into a buyer's market. That would be because of this guy right here, these interest rates. And so as long as if that happens, all bets are off in terms of what the market looks like. What's going to impact that is going to be back to what we just looked at, and that is homes for sale. And in fact, let's just look at it this way in terms of homes for sale for the last 3.5 years. You can see that when 2020, beginning of 2020, there were 4,000 homes for sale in Davidson County. Peak of 2020, 5,400 homes. We haven't seen that number since. Some of that's been slower construction because of just everything that's happened in our world in the last 3 years, pandemic and otherwise. However, this year you can see, man, it has been flat. We have not seen any spike in inventory, and this is the biggest county in Middle Tennessee here in terms of population for Davidson County, right? And so I mean, it's basically been 3,500 homes for sale for months now, really all year. And so my reason for sharing this is again back to that question that we had at the very beginning. Are interest rates basically making the market stagnant? Are they taking the life out of the real estate market? I would kind of say yes in a way, because look at how flat this is right here. This right here makes me go, there are homeowners that just are not moving because they've got a low interest rate and they don't want to trade it in for a high one. And there will always be people who have to move. I mean, that's just the reality of life. A job transfer, a change in life circumstances. I mean, those things are just going to happen. And that's, in my opinion, probably where the majority of these 3,500 homes are coming from. And yet, so many people are just deciding to stay put for right now, and understandably so. Now, the interesting thing to me, and just look back here to 2021, you can see a lot of similarities and some trend lines between 21 and 23. And my reason for bringing that up is beginning the end of 21 into 22. This was the most extreme sellers market we have ever seen, and honestly, I hope we never see again. While it helped a lot of homeowners take advantage of the market and sell for numbers they never thought they'd be able to sell for, or at least at that time, The reality was it was a frenzied market. You couldn't even buy a home for some people because there were dozens of offers on every listing. Um, this trend that was brought about because this trend line right here in 2021, no homes hit the market. The homes for sale went down, and in fact, look at new listings. You can see well, that's kind of too jagged to really see a good easy trend line. But you can see right here homes for sale never peaked in 21. So then when the typical drop off happened at the end of the year, and in fact, when I say typical drop off, again, just look at the map or look at the stats. They're always a bell curve. It just is what it is. Less homes are for sale in the wintertime. And so when that typical drop off happened in 21, it created such a shortage of homes that it created that frenzy, right? Because interest rates were low. Now we're likely going to see that drop off again. I mean, who knows if we're gonna get back down to 2,500 homes for sale like the absolute bottom was in February of '22. But if we do, and this goes even below that, we'll see what type of demand that is for homes at 7% for an interest rate or 8%. If rates are there, say they're 8%, say they're 10%, who knows? Um, it just kind of it's an interesting market to say the least. But my point being is, in my opinion, rates are keeping this number down, which it's that if anything is the only thing that's keeping like high rates and low inventory, or why this is not just dropping. Because if rates were low again, we'd be seeing insane demand on everything, and things are almost, if anything, just kind of balanced right now. I'm rambling on some numbers, guys, and so I'll probably cut the video off here. But as always, if you want me to dive into what this looks like for your specific scenario, maybe you're in a certain county or a certain city or a certain price point, and you're curious about what this looks like for your home, just reach out. I'm more than happy to walk through some numbers with you, educate, and then if there's anything I can do to be of service and help, whether it's buying a home, selling a home, or investing in real estate, I'm here to be of service. I appreciate y'all for checking this out, and we'll talk soon. Thanks, y'all. Bye.